Insurance under pressure? Is growth eroding service quality? Introduction: a changing game. I've been in the insurance game long enough to see it evolve, working for major carriers, then building my own agency into a thriving operation. When I started, commissions ran as high as 15% for new business and renewals alike, fueling a culture of trust and stellar service. Today, that model's crumbling. Carriers like Farmers, Allstate, and State Farm have slashed commissions. Some renewals now pay a measly 4% and doubled down on growth, forcing agencies to rethink everything. My agency faced tough times. 2024 was a year of losses, with clients cut loose by tightened underwriting. But 2025 is off to a good start, with projected growth of 25% on track so far. I'm not worried for my customers. They still get the quality they deserve, but for the millions who don't have an agency like mine fighting for them. This industry is shifting, and it's not all good news. The past. When commissions supported service. Back in the day, 15% commissions on both new and renewing policies gave agents the resources to prioritize clients. In the 1990s, independent agents averaged 12 to 15% on property and casualty lines, according to the Independent Insurance Agents and Brokers of America, IIABA. That cash flow wasn't just profit, it was time. Time to answer late-night claim calls, tweak policies to fit a family's needs, or sit with a client after a loss. That human connection defined insurance. With over 36,000 independent agencies across the U.S. in 2000, per IIABA, customers felt truly cared for. High commissions made that possible. It was personal, not just business. The present, commission cuts reshape priorities. Today, the industry's flipped. Renewal commissions have tanked, sometimes down to 4%, while carriers dangle bonuses for new business. JoinFirefly.com shows captive agents earning 8 to 12% on new sales and just 4 to 10% on renewals in 2025. Independents get slightly better at 10 to 15% and 8 to 12%. Big carriers have been slashing for years. Allstate cut commissions by 10% back in 2018, per Insurance Journal. In states like California, premiums jumped 50% since 2020 due to wildfire risks, says AM Best. Florida's seen 40% hikes since 2022 from storms, per the Florida Office of Insurance Regulation. Yet agents are earning a fraction of what they once did. Commissions are down over 50% from their peak. Carriers enforce strict growth quotas. Some demand 20% annual increases, according to industry insiders. Smaller agencies, making up 60% of the U.S.'s 37,000 agencies per IIABA 2024, are drowning under this pressure, forced to cut service to survive. One agency's adaptation, thriving through tough choices. My agency's journey hasn't been easy. In 2024, we lost about 15% of our clients. Carriers tightened underwriting, non-renewing risky profiles like late payers or high claim folks. It stung, big time. But that pruning forced us to refocus. We doubled down on clients who value personal service, made strategic adjustments, and now 2025's tracking a 25% growth rate so far. Our customers still get quick responses, 95% of calls answered in 20 seconds, and tailored advice. 90% rate our service excellent in our latest survey. Some agency owners, even at Farmers, might question those numbers, but they reflect today's market reality. We're proud of what we've built. It's proof you can adapt and still care. The real issue? A gap in customer care. My success isn't the point. It highlights a crisis. Over 22,000 U.S. agencies have fewer than 10 staff, per IIABA, and they're swamped. They're forced to pick between growth and service usually loses. With commissions so low, agents cut off time-wasting calls or endless disputes. I love my customers and want to help, but when every minute counts financially, long explanations become a luxury. Too many policyholders end up feeling like numbers, not neighbors. J.D. Power's 2024 study shows trust in insurers at just 49%, down sharply. In Florida, Texas, and California, customers pay more, 11 to 50% premium hikes, and get less attention, with satisfaction dropping 12 to 15%. The rise of MGAs, middlemen with big consequences. Then there's managing general agents, MGAs, shaking things up. These firms are hired by carriers to underwrite policies, bind coverage, and manage claims under delegated authority agreements. They don't take the risk, carriers do, but they earn 60 to 80% of their revenue from commissions and bonuses. In 2025, MGAs handle $47 billion in U.S. premiums, 7% of the market per AM Best, and over 10% of the UK's £47 billion insurance pool, says Insurance Business UK. They bring niche products, but here's the catch. MGAs can pull all agency contracts at once. Surveys show 20% of U.S. agencies face sudden MGA cuts in 2024. In states like Texas and Florida, that's cut consumer options by 25% since 2021. Per the Insurance Information Institute, MGAs prioritize carriers, 83% of their loyalty lies there, per a 2023 MGA Association report, leaving clients with slower claims and less personal care. AI and automation, the cold future beckons. Automation and AI are hitting hard too. Neurometrics predicts 70% of underwriting and claims will be AI-driven by December 2025, up from 40% in 2023 per Insurtech magazine. It's efficient. Claims drop from 10 days to 3, says Accenture, but cold. Call customer service and you get a bot or a scripted voice from overseas, not a local agent who gets your life. U.S. call center jobs in insurance fell 12% since 2020, 30,000 roles shipped offshore, per BLS 2024. In 2023, 60% of insurer calls went overseas, per call center week, and satisfaction's 20 points lower than with local reps, says J.D. Power. My agency automates 20% of our work, but keeps humans front and center. Too many don't, and that's killing the connection. Consumer guidance. How to find an agency that still cares. So, what can you do? Check reviews. J.D. Power ratings show who's still delivering. Ask about response times. Our 95% in 20 seconds sets a bar. Go local. Agents who know your community matter. Dig into their process. How do they handle rate hikes or disputes? Talk to their clients if you can. Real feedback cuts through the noise. You've got to find agencies that still care. Ones like mine, with 90% retention. It takes effort, but it's worth it. Conclusion, can insurance evolve without losing its core? My agency's on pace for 25% growth in 2025 after a rough 2024, proof we can balance service and survival. But the industry's at a breaking point. Commission cuts, MGAs, AI, and outsourcing are eroding what made insurance special. Customers nationwide face higher bills, up 11 to 50%, and less care, with satisfaction down 12 to 15%. My clients stick with us, 90% stay, but millions don't have that. Carriers chase $1.8 trillion in premiums, but at what cost? Can insurance grow without losing its heart? Find an agency that fights for you, because if this keeps up, we're all losing something big.